Hello clients and friends. The end of 2022 is approaching quickly. There are some very long days and weeks in the 2022 year which made for trying times for both you as an investor and me as a financial planner and wealth manager. Our team worked tirelessly to try to navigate what I deem as one of the most challenging markets in my 15-year career. The year immediately started out with a very bleak outlook that the Fed would be raising interest rates. Immediately, we saw a sell-off in both the equity and the bond markets at the beginning of the year. Stocks had to reprice themselves for 2022 projections based on earnings, and the overall economy was immediately revised. On the heels of that, Russia invaded Ukraine, which sent the entire global economy in a bit of a downward spiral. Supply chain issues from COVID-19 continued to impact the markets the first half of the year. It was really this perfect storm that all collided at one time. I worked very closely with the investment research team to reallocate portfolios. We increased cash positions in the portfolio, and I'm continuing to hold on to those cash positions anywhere between 10 and 12% as the rebalances are happening quarterly. I showed many of you the history of the stock market chart on my desk. Dates back to 1934. 80% of the time, we have had a market correction of at least 10% or more of a decline in any given calendar year. However, I think we can all agree that this year felt a little bit different. Every time we filled up our gas tanks at the pumps, stepped foot in a grocery store, or tried to just live our daily lives, it seemed never-ending sticker shock on the most basic of items. As a result, the Fed had to step in and monthly raise interest rates to try to combat inflation that we haven't seen in probably 40 or 50 years. Year over year was somewhere around 8%, and the Fed and the stock market truly seemed to have this push and pull for power throughout the entire year. What would normally be deemed as good news for the stock market seemed to send the market the other way because it was in anticipation of the Fed raising rates because inflation was still on the rise. This really forced the Fed's hand. It seemed to be the general trend, really leading all the way up into the midterm elections in November. Anytime we have an election, it certainly brings any bit of volatility to the market, and that was no different than this year. For at least the short term, we think the Fed might continue to raise rates, and we do believe that's going to be the trend into 2023. As I've told many of you at our annual client meetings, we do believe this is going to create continued volatility at least for the next 6 to 8 months. I know it's not great news, but it's me being honest. And with that being said, we have rode this market out together in 2022, and we're going to continue to push our way through any more volatility we have into the near future. I do want to close out by saying thank you for believing in me. Thank you for trusting in the Good Life team during these times of uncertainty. And thank you for just giving me the opportunity to continue to guide you in your financial decisions throughout the year. For those of you who sent your family and friends to us for financial planning services, I truly can't thank you enough. It is the greatest compliment I could ever have, and I appreciate the opportunity to advise additional families within the practice. I hope each of you have a wonderful holiday season and do your best to enjoy the time with your loved ones. I am going to be taking some time off in between Christmas and New Year's, but I will still be available. Going to try to enjoy some time with my 2 boys and make some memories. But I'll be available, as I said, and if you need anything, please don't hesitate to reach out. I wish all of you a happy holiday, a happy new year, and I look forward to seeing each of you in 2023.